Welcome back to another episode of the Meet Kevin Show. Today, we have the honor, for the first time ever out of like 10 shows we've done, of having Ross Gerber in person, in studio, in the flesh. We even split a... Okay, maybe we won't go into that just yet.
Talk about our lunch, you know.
So, at lunch, you mentioned that you want to step on Elon. What is going on with you and Elon?
Oh, you're going to start with that?
Yeah.
You're such a YouTuber, you know. I come in here, you know, it's like I want to do an in-person show. You know, it's like in the old days, you'd go into studios like NBC or whatever and do shows. And now because of Zoom.
It's all virtual.
Yeah, it's all virtual. Yeah. So
and then you got the lag.
Right. And then you're always like staring at a camera, basically. So thank you for inviting me. I did want to actually see you in person today.
Thank you.
And I actually think shows are better when they're in person.
Agreed.
Personally. No, I think a lot of people misinterpret like my love for Tesla and my dislove of what Elon's doing right now. The whole reason I'm upset with Elon is because of what he's doing to Tesla, because I love Tesla. See, I don't love Elon. It's not like I invest in companies, and Tesla's been one of the best investments of my career. I love the products and services. I love the people who work at Tesla. And I just don't think it's fair what he's doing to the people who work at Tesla and the brand. And I understand that he's obsessed with Twitter, and that's his passion. And he thinks his approach to the world's problems is somehow making the world better, but it's certainly not making it better for Tesla. So that's really where I'm coming from. I'm coming from a Tesla shareholder perspective that I want the CEO of the company to go out there and sell cars every day. And I just don't think he's doing that.
So you think it's more just that he's almost insulting maybe the Tesla investor who's believed in him and the company and sort of helped him build up Tesla because he's distracted?
Yeah, I think he's almost like shoving the dirt in our face. Like it's like not fair to us. And that's what makes me so angry. It's like I've supported Elon for a decade. I can't even tell you how many interviews I've done against people who simply wanted Tesla to fail. Forget Elon. They wanted Tesla to fail for various reasons. And Tesla succeeded, and it's done a remarkable job making wonderful vehicles. And I think that the CEO and the founder of the company should spend all of his time promoting this wonderful brand and company. But he is working at Twitter, and that is his focus. And with that comes a lot of, I would say, unnecessary noise, distraction, and unfortunately, it's hurt Tesla sales. And I just don't think there's any doubt about it. And because of that, it's hurt Tesla shareholders, and we haven't made money in 3 years. And it kind of sucks in a bull market when everything's taking off, and Tesla's actually an AI company. It actually pretty much invented a modern AI driving system. And like, we're seeing none of the benefit of this.
Right.
And I just think at some point, that's what leadership is taking responsibility for what's happening. And Elon needs to take responsibility for what's happening. I'm sorry. That's where I'm at.
That's fascinating.
You can not like me because of it. That's fine. That's my opinion. You can have yours.
It's almost like the other software companies that have bolted on the AI 100%. Features that are nominal, they're all doubling or taking off.
Like SoundHound, you know, it's like, oh, I got a double in SoundHound. I got ServiceNow. I got this. I got that. Everything's up except Tesla.
It was based on AI from the get-go. Do you think Elon's time at Twitter has contributed to his losing of this pay package in Delaware? And should he have left Delaware?
I don't think that has anything to do with it.
Okay.
What I think is that corporate governance and the way companies run, anywhere from HR to compensation, in particular compensation at public companies, is a really quite a complex and painful process for most companies, because CEOs are highly paid, and there's a process that companies go through when they create pay packages that's quite intensive. And so what happens in Delaware was Tesla only has 8 people on the board, which is very uncommon for such a large company. Usually companies have at least 10, 12, 13 directors at this size. But then on top of it, all of the directors have some close relationship with Elon. And that's not per se as problematic as the fact that those directors are presenting themselves as independent. This is what Delaware said. And this is what I think a lot of people in the Tesla community don't understand. It's not about what he deserves. I actually think he deserved it too. And I was fine with the VACAP package, and I voted for it. What I think is that Elon's, how would I say, this was Elon's mistake. Knowing that if he succeeded, he would have to defend the pay package. He should have taken the steps from the beginning to have this be an independent process. But instead, he brought a pay package to the board, and the board said, that sounds great, Elon. You hit these numbers, no problem. But there was never any pushback or debate ever documented. And that's just what required by law.
So even though the shareholders voted for it, they didn't go as far as they could have in terms of making it ironclad.
No,
that this was negotiated and debated.
Delaware saying that the shareholders voted on a proxy that was misleading because we were voted under the assumption that this pay package was actually debated upon and approved by the board, like there was some give and take.
That's how they're arguing that voting almost didn't matter because what people were voting on was potentially misleading.
100%. That's what they're saying, is the vote didn't matter because you actually didn't have all the information. Delaware is trying to protect the shareholders who would be paying Elon $50 billion. Now, why this should matter to Tesla shareholders is that if the pay package was legit and it was completed, Elon would owe $25 billion in taxes. Okay. And the only place he could get that money would be to be selling $25 billion worth of Tesla stock. Okay. And so people have to understand that this is massive dilution to Tesla, this pay package, whether he deserves it or not.
Sure.
So the idea that it didn't go through an independent process before shareholders voted on it, that's the issue. That's what Delaware's saying. So it's very simple. If Tesla wants to do a pay package, they need to get board members who are truly independent so that there's a compensation committee that could have pushed back. For example, if they would have said something like, well, Elon, the upside on this is 50 billion. That's extreme. Maybe we should change it so the upside to this is 10 billion. And then they negotiate and they decide the upside to this is 20 billion.
Some negotiated settlement. Right.
At least they could have gone back and said, there was a process. But they can't even do that. Now, here's one of the wealthiest, supposedly smartest people in the world, and he doesn't know basic corporate governance.
Wow.
So there's nobody to blame for this other than Elon.
Building almost the optics of it. So what about the idea of a new pay package now going forward? A lot of people say maybe he doesn't deserve what he had because of the performance of the stock over the last 3 years. What's your take of that? Other people say, no, give him everything he had and give him even more at levels where Tesla is now. Where does it go from here?
Well, Tesla could do two things. I think to give Elon a massive pay package when he basically works at Twitter doesn't make any sense for Tesla shareholders. What he wants is another 12% of the company. And what I would offer him is exactly that. I'd say, I'll pay you 12% of the company over the next 12 years, but you must sell Twitter.
Oh, wow. Okay.
You must work at Tesla as CEO full time. Wow. Okay. And you can have 1% of the company each year for the next 12 years until you're 65 years old and you retire.
Wow.
Okay. You don't even have to do anything. It'll just vest over 12 years. Just sell the damn Twitter. Just sell it.
So that's been so bad.
And if he never tweets again, I would give him another 3% of the company. Okay?
15% just to shut your mouth.
Yeah, 100%.
But that's censorship, Ross.
It's not censorship. It's called capitalism.
Tell me about that.
If you want to give me 3% of Tesla, I'll never tweet again.
Because a lot of people will say, well, Elon should be free to say whatever he wants, but you take issue with it. Yeah, of course. But you take issue with him being, well, saying whatever he wants.
Right. I'm also free to say whatever I want. Yeah. And I run a company with lots of my friends who work there. Yeah. Why do I want them all mad at me every day? Okay. You don't want to hear everything that I think. Trust me. Okay. And so there is a very deep filter system that I have actually. And it's amazing. After 10 years of being on television, I have not screwed this up too badly. I've made a few mistakes.
Everybody makes mistakes. It's okay.
Oh, no, I made them.
Yeah.
Oh, boy. And boy, but I learned my lessons. But my goal is to build my company. You know, Gerber Kawasaki is the most important thing to me, and my coworkers are the most important thing to me. I do care about building my business. And so if I'm doing things that are detrimental to the business and my friends and coworkers are bringing that up to me and I'm trying to be a cognizant leader, you know, I have to take this into account. It's not about freedom of speech. It's about capitalism. It's what's best for my business. And some of my opinions are not palatable to everybody. Right. And so it just doesn't need to be public.
Well, it's almost like what we say is, what do we not talk about at the dinner table? Politics and religion, because you can't please. It's impossible to please all sides.
Well, they used to say that, like, you never want to talk about these things on dates. So I would always start off with politics, religions, and sex, like right off the bat.
Okay.
Like, let's just get this done so we can not waste one more minute dating,
Oh, because if you weren't compatible, you wanted to end that right away.
Why waste any more time? So let's just dive into the worst things now.
That's actually funny. Do you think that there's a problem with the judicial system, in that is it possible that Elon's pay package was taken away by a Democratic judge? Same thing as with Trump losing his $450 million fine appeal by a Democratic judge. Is how impartial can the judicial system be if they do have labels as well?
Well, you can look at it this way. America was founded off, our system, and our system has a judicial system that's separate from the legislative and the executive. And there's a reason for that. The separation of powers allows the judicial system to operate freely from politics, okay? So when you're a judge, whether you're a Democrat or a Republican, it doesn't matter. Okay, you have one of the three corners of power in the United States, Supreme Court being the top judicial body. So they don't give a crap about politics. Judges are trying to apply the law as best as possible, or as they see fit. Okay, so to imply like the Trump verdict, Trump lying on financial documents to get better loan rates is actually a competitive advantage, because I was, let's say, bidding on the same building as Trump was bidding on, but my rate was 3% higher. Okay. So it's a worse deal for me. But if Trump's just lying on financials, then it's just anti-competitive behavior. It's illegal. You're not allowed to do it. And he made money because of this.
Some people say, though, that's on the bank to verify what you put on your financial statements.
How many loans have you gotten in your life?
Lots.
How many have you lied on?
None.
Okay. That should answer the question. Okay. You don't lie on financial documents for banks or for anybody. And it's just a simple thing. Like, your net worth is a variable number.
Oh, yeah.
Okay. So I could say this house is worth $2 million. This house is worth $1 million. It's a variable number. But there's a way to do things, as I said, where you can say, well, this is why I got this number, and this is how.
Like, here are three other homes in the neighborhood that all sold for $950, $1, and $150. So we took the average. It's a mill. Like, at least there's a way to explain it. That's what you're arguing.
Yeah, 100%. And so it's like valuing things so wildly off, just for profit, which Trump did, is anti-competitive, illegal in New York. Now, I think in Trump's case, he almost does everything possible to make things worse for himself.
Oh, wow.
It just seems like, half the stuff is because his own lawyers and his own people are turning in the evidence to the government.
Oh, interesting.
There's like Michael Cohen, all these people, we wouldn't have any of these cases if it weren't for his people.
Wow.
Wow. So
sort of the idea, like, the upper level of Trump Tower was 10,000 square feet, but reported on Trump financials as being 30,000.
Yeah. And that's a massive difference at 2,000 a foot in New York, or 5,000 a foot in New York.
Right.
You're talking a massive difference in valuations. But, once again, if I need a loan right now and I have assets of 300 million when I really have assets of 5, it's a completely different profile for the bank,
Right. Somebody might actually do a deal with you versus not.
Right. And just the same, I'm competing to buy a building worth, let's say 200 million. It's a big building in New York. This is a big competitive advantage if I'm borrowing at 2.5% and the other guys are getting 5.
What do you think about people who say, again, it's the bank's problem to underwrite and verify that nobody was harmed in this, that Deutsche Bank was paid off?
I love harmless crimes. Nobody's harmed with prostitution. Nobody's harmed with drug use. It's like, no, people are harmed. And it's the other people who wanted to buy the building, okay, because they got screwed. So if we live in America where it's supposed to be like capitalism and it's fair playing field, and one guy lies on all the documents and beats you to the deal, is that capitalism? Is that fair?
Interesting. So it's sort of like they were robbed of their reasonable opportunity because maybe their forms were perfect.
Right. Remember the college scandal that happened where all those rich people were like buying their kids into USC?
Lori Loughlin from Full House.
Lori Loughlin was one of them. Went to jail for this. Yeah. She literally went to jail for buying her kid into USC.
Right. And you could argue who was harmed.
Who was harmed?
Right. Okay.
Who was harmed?
That's a good comparison.
Well, it was the kid who applied to USC
who didn't get in.
Yeah. And it's bullcrap. It's bullcrap because that kid was smarter and sharper and worked his butt off and didn't have his mom on some horrible show. Okay. And
you didn't like Full House?
No. And a dad makes like crappy surf clothing, and they live at Bel Air Country Club. And this is like their life, and they're buying off everybody to get their kids into school. Well, my kid's working really hard and I'm not buying anybody off. You see what I'm saying? So somebody is harmed, and it's a sort of like, oh, it's esoteric. It's like, who was that person?
Right.
But it was somebody. And we know that Lori Loughlin's kid didn't deserve to be there.
Wow. So how do you think this then relates to Elon when it comes to, I mean, should he just shut his mouth, or should he just leave Tesla? What's the solution for him? Like, where is he going to be happy? And what changed? Or has he always been like this?
Well, I don't think he's ever been happy. And I think if you read his book, it's pretty clear that he's, I think everybody should read the book. If you really want to understand Elon, I think it's pretty clear he's extremely difficult childhood, extremely difficult, one that I can't relate to in any way, like in any way. I don't even want to get into his father. I mean, it couldn't be worse. So I do have sympathy for him. I mean, in the sense of like, he grew up in a really, really bad place, but I think as a result of that, I think he has some blocking in his emotional connections, with people. And because of that, I think
he's callous to feeling empathy, maybe.
Yeah, I don't think he feels empathy for people at all. And I think engineers in general tend to be a little bit different breed too, much more analytical than emotional. But he doesn't seem very in touch with his emotion. So I think the real question is, what does Elon want to do? Because the idea that he's actually running 7 companies isn't real. He's one person. The idea that he's not a human isn't real. Okay. I know he lives in pain. He has back problems and such, So the question is, what does he want? I think really the best thing Elon could do for himself is actually take time off.
Oh, wow.
Okay. He has never stopped working ever. And when you see his schedule, it's not sustainable long term. And that's my biggest concern, being an Apple investor and watching Steve Jobs die and watching that whole process. Is my biggest concern is for his health. I mean, if you really care about Elon, you should be telling him not to work anywhere.
Jeez. Wow.
He should take 3 months off. He should really try this. Like, it would change his life if he could just go to Kauai, where I go.
With Mark Zuck.
No, because I don't go near Zuck, because he doesn't actually leave his compound. He doesn't hang out with Hawaiians,
Hey, quick note, mark your calendar for June 21st to 23rd. We are doing a 3-day Make Money, Wealth, Become a Millionaire Symposium. We haven't figured out the name yet. By the time you watch this video, we will have. Go to meetkevin.com. Ross Gerber will be there. We're going to have an event with a lot of speakers. It's going to be great. We're going to learn real estate. We're going to learn finance, stocks, investing, taxes, you name it. So mark your calendar in person, none of the Zoom stuff, in person, meet the people, ask the questions, learn the stuff, finally get on the right path. So go to meetkevin.com to learn how to sign up. And the sooner you sign up, the better deal you get on the tickets. And you'll be there.
And it's in Vegas.
And it's in Vegas. And Ross will be there. Let's go. Baby.
No, but you go to these places and you spend time with yourself and you just try to decompress, the stress you deal with, your life, and it's just an important part of living. And I think he needs that really badly.
Why do you think Tesla stopped providing guidance on deliveries?
Because they have no idea.
They have no idea.
Yeah, I don't think
they know. Is Zach left, the only person with an idea?
No, I think losing Zach sucked. I was a big Zach fan.
Yeah.
I think it's because forecasting demand is a really tough thing with changing rates, different economies, and things like that. Globally, he deals with 3 markets globally, China being probably one of the biggest markets in the world that's in real trouble right now. And it's a big market for Tesla. So I think it's really hard to forecast on 3 continents with multiple economies. You've got supply coming on in 3 continents. You got demand in 3 continents. You got to line that up. So Tesla has a challenge, and I think it is hard to forecast. But I think the issue is, what's the capacity of production? And I think that's probably closer to 2.5 million cars now. And can they actually sell 2.5 million cars without lowering prices? And that's the bigger issue.
Do you think China presents a buy the dip opportunity? Are you going to pull a Michael Burry and go all in on Alibaba?
No. I fundamentally think China doesn't care about capitalism. They're communists. So shareholders in China already start on the wrong foot because you actually don't own equity in those securities. Most people don't understand that. Like you don't own the equity in a Chinese company. You just have like a shadow share or something, and then like the whole Chinese economy is built on like matchsticks and it's completely falling apart.
Wow.
And we've actually supported the Chinese for the last 20 years through exports. And so their best customer, they decided to attack and piss off. And so I think the Chinese are finally realizing maybe the West is important to us and Russia isn't going to buy all our goods.
Oh, wow.
And so now China's in trouble. She's put himself into a corner, and that hurts Tesla though. Because Tesla's biggest market is in China, and now the economy's going to heck, and there's plenty of competition in EVs in China,
Why do you think that is? Why is there so much competition for electric vehicles in China, where it feels like there really isn't in America? Ford scaling back, Mercedes, I know that's European, obviously, GM scaling back, Rivian and Lucid are becoming less profitable, right?
Growing.
And you're not growing. You're becoming less profitable on top of that. Whereas if we look at China, it's just in the support of the government there. I mean, you've got NIO. I mean, they're certainly doing better than the American versions of the companies. You've got BYD that's crushing
You've got a lot of
them out there.
Well, part of it is the government supports it. The government's saying we want EVs. We don't want to be relying on oil. Well, China doesn't produce oil. Really. They import most of their oil.
Oh, so they want away from EV especially. Maybe. Or, I'm sorry, from gas.
From gas,
yeah,
right.
sorry.
So they got to get gas from us, the Arabs or the Russians, right? So so like Russia's been providing them a lot of gas cheap right now, and she sort of saw that as an opportunity. But what he didn't assess was the damage it would do to the other side of his business, which is selling goods to people. And so China has no incentive to want gas, and also I think China does want to be green, not just for economic reasons, but because the pollution is so bad in the cities, you can't even walk around Beijing many times. So I don't know if you remember, it was about, I think it was like 5 years ago, where the pollution was so bad in Beijing, they had to shut everything down. Jeez. And so what happened was they had to shut down all the factories around Beijing because it was just like you couldn't go outside.
Let it clear up a little bit. Huh?
So it's not like, climate change, we just care about Earth for everybody. It was like, it's so bad here, we can't breathe. Wow. So you can't breathe, you got to do something, right? Wow. And then, so they've just gone all in. So unlike the United States, China supports all these companies and partially owns all these companies. So when they decide we're going to be an EV country, that's what it's going to be. And that's what China is going to be. And it's super smart that, it's smart for them. In America, being a capitalistic country, we do support the EV industry. Sure. So I'll take that back. We created supports under Biden for the EV industry. There's wonderful incentives to buy EVs today. There's more wonderful EVs in America today. But I think that Americans don't understand the value of an EV because the Chinese government spent a lot of time educating people on why they want an EV. And the US government spends all its time not educating people about energy. Okay.
How much does the government really educate out here? Remember when I ran against Newsom? Should we run again if he gets recalled again? I can't do it. I can't do it again. But that was one of the big things. We need schools out here, future schools. You remember that?
I think you should start a local government. I think you can win.
I'm not doing that.
I was like, I think you can win a bunch of stuff and work your way up.
Thanks, man.
But boy, I was confused when you got into politics.
Thank you. Well, thanks for being there for me during that time anyway.
Well, I supported and voted for you.
Thank you.
And I thought it was a good lesson for you too about how the world works. It's a little bit weird.
What about Bitcoin? So you guys still hold Bitcoin?
Oh, yeah. So these are good days for us being long-term Bitcoin owners. And we have a crypto program at my firm and we didn't bail out, when things get bad with Bitcoin because, we're just going to own it forever. We stopped growing our Bitcoin program because Gemini ran into problems and they basically kind of cut us off because they were teetering. And then we were like, holy crap, they're teetering. And it looks like they're going to get over the hump. But we've basically been on hold with building our program because basically the whole crypto industry is in shambles, right? So what's happened with Bitcoin, which I knew was going to happen, and it just all kind of just happened after the SEC lost that case. I think it was with Graysdale or somebody, which was essentially when we started our ETF, when we were at the New York Stock Exchange in 21, I was asking the guys there, like, why isn't there a Bitcoin ETF? And a lot of it was the custodians weren't playing in it. So there was no way to accumulate, Bitcoin every time there were inflows.
Right.
And then there was a valuation system that was broken because most people didn't understand the way Bitcoin was valued was taking the average of several exchanges.
Sure.
Okay.
Yeah.
So that doesn't work for the New York Stock Exchange. So what they were telling me is it just depends how long it takes till this industry grows up. And so what happened was Fidelity was really the leader in the traditional finance industry in Bitcoin, building a Bitcoin mining operation and an institutional Bitcoin practice early. And they kind of went all in, where Vanguard is like, F you, F
Yeah,
Bitcoin.
they're still like F you. I mean, now you've got even Morgan Stanley, Bank of America. Hey, we want this on our platform, you know?
Totally. And so, we originally felt the best way to deal with Bitcoin would be to open up, wallets for each client so they could actually use their Bitcoin.
Right.
But what ended up happening, which it's still an issue, is nobody can trust these exchanges. And so the idea of a Bitcoin ETF was stupid to me because I was like, well, I can't use my Bitcoin. Why would I buy this? It's like just sits there in a brokerage account. But then things kind of changed because if you can't trust any of the custodians, maybe an ETF is the best way to do this. Especially because most people don't actually use their Bitcoin.
Right.
You know?
It's an investment or for speculative purposes in crypto or whatever it might be.
Or maybe you want to own crypto, but you just don't know where I can do this safely.
Right. And have insurance on it.
Right.
Yeah.
And so, Bitcoin ETFs come out, me knowing the numbers, I knew inflows would be quite good. And most people don't understand that most Bitcoin ETFs are not for sale at most broker dealers today because most ETFs have to be at least a year old before they're added to platforms. Right?
Yeah.
You should know that, right? Oh. And so right now at my firm, you cannot buy IBIT at LPL because it hasn't been approved yet.
Oh my gosh. And this is BlackRock we're talking about.
Right. So what I did was I went out and bought it in my ETF. So my ETF actually owns about 1% in Bitcoin.
Oh, wow.
Yeah. I'm the only ETF in the world that actually has AI, cannabis, and Bitcoin in the same place. It's pretty cool, I think. But that said.
And that's ticker GK.
And so so our Bitcoin we're up on like right away. And I immediately, wrote to the advisor show guys like, what do I have to do to add this to my ETF? And they're like, we just have to file with the SEC, a couple forms and do it. And, so my clients are getting a benefit to this Bitcoin now without having to do this. So the ETF all of a sudden serves a purpose if we can't trust custodians, right? So in the next year, these Bitcoin ETFs will be added to all the platforms.
Wow.
And then it's just a matter of time till some goof at like Merrill Lynch says we should have a 1% allocation to Bitcoin.
Then everybody does it.
And then it's like the $1 trillion firms start buying 10 billion each.
Wow.
And then it's all done. And then Bitcoin goes to, I don't know, doubles, Well, and by the way, it's the halving right now.
Oh, right. And on top of that, to use the half number, I want to say about half of Bitcoin hasn't been traded in the last 2 years. At least some Bitcoin hasn't been traded in 5-10 years.
Yeah, I think a lot of Bitcoin will never be traded.
Quite possibly.
I don't sell my Bitcoin. Well, I've never sold a Bitcoin.
I think there's probably a good chunk that's also just lost, originally created.
I would think that a lot of it is lost.
It's just gone,
It's just like in some computer somewhere. Yeah.
So the supply is probably lower than it actually
and then there's the Satoshi coins or whatever that is. Whoever owns that, I like that part of Bitcoin. That was always the part I was like, everything was good in the story until you got to Satoshi, and that's when you lost me. I was like, what is this?
And I think that's what people love about not knowing really who the true identity is of the person who created Bitcoin because of
mystery.
Yeah, because if you knew, it'd be like, well, that person's a scam.
And that person's never taken the money out either.
Yeah, exactly.
Yeah, it's untouched coins.
It's fascinating.
But I think for people in general, and they're like, why do I need to own Bitcoin?
Yeah.
And I say, look at the US government. Okay. It literally printed trillions of dollars on a dime, then jacks up all this rates to suck it all back in, right? It's like, how much money, now you look at the Chinese government just falling apart. There's one solution for China. You know what it is? Printing more money, okay?
It is true, and they're not.
Right.
Their stimulus is so nominal.
They didn't study the Great Depression in the United States.
Oh, wow.
So they didn't study it. Okay. Because in the Great Depression in the United States, they did what China was doing, which is not stimulus when things are bad.
Austerity.
Right. And that we need to actually not go into deficits and we need to not print money because we want to be like like financially solvent, but what I'm doing is putting everybody out of business.
Right.
Okay. America, we never had any problem printing money. Okay. We've been printing money like crazy people since I was born.
Yeah.
So the idea that you could have a global currency that isn't printed all the time is actually pretty, nice. And then my dad, who's, in his 80s, is like, why does anybody need Bitcoin? And I was like, well, Dad, he likes to go to Germany. I go, let's say you go to Germany, and you need money. Like, how do you get money? How do you pay for things? It's like, you got to get euros or use a credit card or something like that.
You pay all the fees.
But Bitcoin works the same way. It's just on your phone.
Sure.
And you could pay anybody in Europe or anybody in Africa or anybody in Asia with Bitcoin anywhere you go. And I go, a lot of places you go with $100 bill in the United States, you can't even use it.
Yeah.
Okay. So imagine if you're stuck, I don't know, you're on a vacation and you're in some random place in Latin America and they're not taking $100 bills. They'll take Bitcoin. A lot of places take Bitcoin. And I think a lot of people don't understand that it does work actually really well when you're outside the United States.
What about Javier Milei, his slashing of government spending? Apparently now he's balanced the budget, qualifying for IMF loans again. Is this like they cook in the books, or are they actually able to turn this around? Because people seem to love what Milei's doing.
Well, I mean, he also's got cloned dogs. Do you see the cloned dogs? Oh, you didn't see this? He loved his dog so much. He cloned it 3 times.
Oh my gosh.
So he's got 4. He's like you, except with kids. He's got 4 dogs. Okay. So being a capitalist and understanding the pain that countries like Argentina have to go through to fix their finances, I really like what he's doing.
Oh, wow.
I think it's really good for the Argentine people. Argentina is a phenomenal country that's literally, for as long as I've been alive, been mismanaged by the government, all the assets stolen by the government. The poor people of Argentina have had to deal with this forever, or they come to America. And this is the same problem. Everybody goes, we have a border crisis. Well, it's because in Latin America, all these countries suck.
Yeah, if you were down there, you'd want to go too.
100%. 100%.
I would.
Yeah.
I'd be like, I'll cross the border.
I'll take my chances in the Rio Grande, right?
Yeah.
And so like, Argentina is a perfect example of this. This beautiful, wonderful country with all the potential in the world, just completely mismanaged since the Evita days, right? And so, so there's an opportunity here. But what happens is that, and this is what happened like in the United States in like 1982, 83 with hyperinflation, is you have to go through a period of time that's extremely difficult because you have to get the government spending under control. Right. So you go through a deep recession that's very painful with the understanding that when we come out the other side, the country's finances will be balanced and the next 10 years will be amazing.
Right.
But the next 2 years might be extremely difficult for people in Argentina. So when you jack up rates and you get inflation under control and you stop printing money, the people live off this printed money. That's the problem. But also the price of goods is going up just as fast.
Right.
So it's going to be a tough time in Argentina on the short term, but if they stick with it, I think he'll be wildly successful.
Better for the long term. Okay, that's good. What about in America? Where's our recession? We're supposed to be in a recession by now.
I think we're learning about human behavior a lot. I was talking to our economists at UCLA about the human psychological things that most of the economists got wrong over the last year, which is that people want to go out and spend money.
Yep.
Okay. And so like there's a vibe that didn't exist during the Obama years, post-financial crisis, where people were it was kind of like the Great Depression, kind of like holding back a little bit, paying off their debts, not really aggressively spending because people went through such a hard time during the Great Recession. Right? Yeah. And then when Trump came into office, he cut taxes and he was like, spend, America's great, go out and spend money. And people started doing that. And by cutting taxes, it created more money in the economy. And that kind of worked. And then
Wait, you just said something that Trump did worked?
Yeah, cutting taxes works. If you cut taxes, the economy does better.
Because some people say you won't say anything.
Well, the other problem is we have bigger deficits because of this. But yeah, that was sort of the talk this morning was like, well, we're going to have to raise taxes more. And I was like, yeah, that'll slow down the economy, because Trump's tax cuts spurred the economy, but it also created a bigger deficit. So that said, Biden comes into office and could have taken steps, but instead he printed even more money and gave it to people, right, in the Recession Act of 2021 or whatever they call this.
Sure.
And that's really what caused the inflation. So now that we've kind of sucked it all back, what's left is that people still want to spend and people still have jobs. And because we've onshored so much manufacturing, and this is also because of Biden and Trump, there's a lot of good paying jobs now, for what we used to call lower income workers. Now in McDonald's here in Los Angeles, you make $20 an hour, and then it just goes up from there. So we've seen strong wage growth and with people wanting to spend, it's kept the economy much stronger despite real estate being dead. Like the traditional levers of the economy are not good. And so it's kind of a weird economy, and you can see it where the prices of services keep going up, but the prices of goods are now starting to go down.
Well, yeah, negative. You're deflation.
Yeah. So in one area you have deflation, the other area you still have inflation, like in hiring. But that's starting to moderate too. So I think what we get out of this is a really good economy, and the Fed starts lowering rates middle of this year. They do it slowly. You've got kind of the best of all worlds. That's why we're really bullish right now.
You think we're going to stick a soft landing?
No, I don't think there's any landing. Oh. We've never landed. We're still at 3% growth. You see what I'm saying? It's like there was never a landing.
Why bother?
Right.
So we're having a good time up here.
What it was we just re-changed the paradigm of rates.
Okay. From
0 to, let's say, 4%.
For now.
Yeah, for now. But the idea being, for 25 years, we all expected to get money for free.
Right.
We all lived in a free money world. It was great. Your real estate, it was great. Buy whatever you want. Prices go higher. Okay. Well, now who's suffering? Real estate, right? Why? Well, they took all that free money. Well, now it's not free anymore.
Yep.
And the loans come due.
Yep.
Okay.
Good opportunities.
Yeah, like Trump's hotel in DC. I don't know if you saw this deal. So Trump sold his hotel in DC in 21 because he was kind of forced to, and he made good money on this hotel. And the guy who bought it took a $286 million loan to buy the hotel from Trump, one of Trump's buddies actually, from Florida. And so the guy has a loan matures or whatever, or needs to be refied, and he can't afford it. It's now in default, and the Trump hotel in DC is now in default.
Wow.
Okay? So people who borrowed at 2, the math doesn't make sense at 7.
No, of course not.
It just doesn't. And so this is going to be a very hard period of time for a long period of time, as every company's debts and every person's debts come due and have to be refinanced at higher rates. And that's like a forever slowing on the economy that will exist, that can be offset by letting the economy run,
So let the economy grow to offset the fact that rates are higher. Do you think we're going back to 0?
No, I don't want to go back to 0.
Oh, wow.
I don't want to go back to 0.
Why?
That means we're in trouble. It means that the government has to print money for us to get growth.
I see.
And what we really want is interest rates at like 3-4%, where it costs money. Remember, I'm a guy with capital. I lend money. I want to make money on my money. I don't want to have to buy equities to make money. And that's what happened for so long. So equity valuations, we had the S&P with 23, 24 PEs in 2021. Today it's getting back up there again, Sure. But we have growth. But we have growth where I can loan money to somebody and make money on the loan too. So it's a great time to buy bonds, and it's a great time to buy stocks. But now the earnings in stocks is real. But where this is painful are companies like AMC, let's say.
High debt.
High debt,
low revenue growth.
Well, they got to refi debts, and they got to get capital, and and all of a sudden it's like, well, a company like AMC isn't going to borrow for anything less than 15%.
Or cruise lines, you're seeing that as well with them.
So 15% is a pretty normal rate for high risk borrowing today.
Wow.
And you can see that in the BDC, business development loans. If you're bad credit right now, it's hard to get money.
So how does that relate to the consumer who might be using like Flex, like buy now, pay later to pay your rent these days? And
that's probably the worst idea I've ever heard.
Yeah. It's really popular now. It's like the top 200 app on the App Store. I'm blown away every time I mention it. It seems like it's higher and higher every time I look at it.
I mean, whoever buying that debt is really dumb.
But are they? Dumb. Because what if they're lending at 20% and they're like, we're going to assume 25% of these default, they're still left with a 15% yield.
Yeah, I know what you're saying.
Yeah.
So here's my thing, and we talked about this before, where rent is your biggest cost.
Right.
Okay. So if you can't afford rent,
it's a problem.
It's a massive problem. It's 30%, 25% of your income.
Yeah.
Is your rent.
Sure.
So like, if you're buy now, pay later in your rent, like, where are you going to get the money later?
Where's the later part?
Where's the later?
So it's due every month.
If 100% of the debt's bad, How does the debt get paid off?
That's a good point because if you have a, you buy a Peloton bike like one time or whatever, and you buy now, pay later, you could stop buying Peloton bikes. You're not buying a Peloton every month.
Right.
But with rent, you are literally
and you owe it every month. So if you buy the Peloton once and you buy now, pay later, even if it's a 10-year loan, eventually you'll pay it off. There isn't an ongoing expense.
Right.
It's once. But that's the idea of buying a product this way.
Yeah, you don't need
pay
that
it
many,
off over time.
You don't need that many coat hangers.
But rent you pay every month.
Yeah.
So it's basically saying you can't pay your rent this month. Somehow you're going to have twice the rent next month plus interest.
It's problematic.
So I think 100% of it goes bad.
So, okay, so you would stay away from that sort of debt. So does
stay
that
away. I mean, I would rather get hit by a club in the head than take your bad rent debt.
Oh wow! So does that create risk for even maybe personal lending companies like a SoFi, for example? A lot of people love SoFi stock. Very, very big on personal loans.
Yes,
15, 18%. And a lot more
loans. Bad. A lot of them are bad. SoFi is actually a good company, and they serve a good market.
Your friend Kathy Wood loves them.
I like SoFi too. I don't have issues with SoFi. I think they do a good job. The issue is the way they book the loans on their books. So we started doing this research because one of the things I learned was that the way banks book loans on their books is all a lie. Okay. So we started this study when rates went up because what we wanted to figure out was if I'm a bank like Bank of America and I own all these loans at 2-3%, like what happens now that these loans are at 6%?
Yeah, the loan value's plummeted.
Right. So it's 40% down or 50% down. Right. So then you go look at Bank of America's books right now, and none of them are marked down. And you go, well,
why not?
Why not? And they go, oh, well, these are loans to maturity. So loans that you hold to maturity, you don't have to mark down in the meantime.
Right.
I go, you know what? I wish I could do that with all my bad investments.
None of these stocks are down because
until
they're held.
They go up again.
Yeah, because they're held in perpetuity.
So we won't. Right. So we won't count the losses this year funny. because I'm never going to sell my Tesla. I'm never going to sell it. So
there's no loss.
It's hold to maturity. There's no loss.
That's funny.
It's not funny. It's $1 trillion
what's
of
funny
debt
is,
this way.
It's true, but what's funny about it is that as you're saying it, literally just as we're recording this, New York Community Bank, which just had a write-down on their real estate, like $500 million, started another banking crisis fear. New York Community Bank, just 15 minutes to an hour ago, delays their annual filing.
Oh, God.
Citing material weakness in internal controls.
Right.
That's probably exactly what you're talking about.
The
debt, the internal controls, and the valuation of the
remember
nonsense.
They bought the Signature Bank loans.
Oh, yeah.
So remember,
a lot of dirt in there.
They got aggressive, bought Signature Bank loans, which were garbage.
Yep.
And then the FDIC makes you buy them very quickly. There's no way you analyze
You can't do
assets.
DD on all that. Yeah, no.
Because real estate it's time consuming.
Oh, yeah.
And so oh, we're big now. We got all these loans. And they're like, material weakness and blah, blah, blah. This means we have no idea what this crap is worth. Okay. So they're going down. It's a $4 stock and it's a $100 billion bank and it's got big enough. So it's systemically important.
Ooh,
okay. So now the Fed's got themselves into a little bit of a pickle with this dog.
Well, because they're closing the Bank Term Funding Program too, where you can take your Fed bailout.
So think about it this way in the sense of, right now, there's $1 trillion of losses that the banks have that they have not reported. Is it down?
It's down 18% in after hours.
Well, down to 4.
It's now a 391 stock.
It's zero. I mean, you know what I'm saying? It's like if you're a $4 bank with bad financials, it's zero.
Yeah, that is the lowest.
So this is going to be the thing that causes the correction.
Banks.
Yeah.
That issue's still going. Are you serious?
It never ended.
But Jerome Powell bailed it out.
No. The only way he can bail these banks out is by lowering rates.
Oh, well, that would make the loan values go up again.
Hello.
Oh, so he has to lower rates.
He has to lower rates. The purpose of the Fed is what?
Well, maximum employment and price stability.
Yeah, but why was the Fed created, though?
Oh, to print money and make us feel like it was okay.
No. That's not why they were created. They were created to monitor and control the banking system.
Right. That's why you're a member of the Fed banks, the different Fed banks throughout the country.
Their goal is stability of the banking system because they're a byproduct of the Great Depression.
Oh, so you're saying the real mandate is the banking system. And then 100%. After that, you have the mandate of stable prices and stable employment.
Correct.
But banking first.
That's right.
And that's Why? Did you realize last month, the same day that they did their FOMC presser, it was like Jan 31 or whatever, New York Community Bank like plummet. It's like down substantially that day. And they removed from their statement, the banking system is sound and resilient.
That's right.
But then they didn't say a word about it in the presser. Right. And not a single of the folks in the media asked about it.
100%.
What is going on?
I'm telling you what's going on. Okay, so this is what we looked at. So how do you value a loan on your books? Okay, so I asked my kids this. If I loan you $1 million, what's the value of the loan?
Well, hopefully $1 million.
Right, but they thought it was like a trick question. You know what I mean? And I was like, no, I loan you $1 million. What's the value of the loan? $1 million, right? Okay, so how does a bank book this loan, right? Well, it depends. The way SoFi books their loans, and I'm not sure if this is actually 100% right because it's super esoteric, but supposedly when they book their loans on their books, they're booking the future value of that loan's gains.
Oh, all of what they expect to collect.
Yeah. So they'll say the loan that's $1 billion loan is really $1.1 billion loan on the book because they're going to collect another $100 million over
because it's an asset that generates income over time.
So there's some esoteric way they're counting their loans too.
It's not payback value. It's payback plus some discounted version of what they expect to earn.
Right. Something like that. Wow. And so I'm like, okay, I'm going to do analysis of a company like SoFi. So the only way to do that is you got to look at what loans they have on the books, which it's really hard to find this information. You know, you got to like dig deep into the proxies and in the 10Qs and all this kind of stuff. And it's like, so it's like in their loan books, and each bank is different depending on how risky or conservative risks they took and how much commercial real estate they own. But somewhere there's $1 trillion in losses from interest rate, and somewhere there's $1 trillion in losses from commercial real estate.
Wow.
And so these losses exist. They're real, but they're hidden.
They're not realized.
And they're all right. So if you liquidated like every bank in America today, there would be a negative NAV. That's what I think.
Wow.
That's what
so you think the banking system's upside down?
No, I know it's upside down.
The whole thing.
Yeah.
But Jamie Dimon is bailed out by Jerome.
Well, he just sold $150 million in stock too. Now, why would Jamie Dimon sell JP Morgan stock?
Well,
why would he do that?
For philanthropic purposes.
Yeah, I'm sure. He's known for that, right? No, what I think is it's a very bad time to own financials.
Wow.
And I think that the only solution is the Fed to lower rates. And every day that they wait, it puts the banking system more at risk. Capital gets tighter, right? And like all these loans start maturing. And people are going to go bankrupt.
Oh, wow.
And you're going to see more bankruptcies coming.
When is the big crash? The big, painful banking crisis is over. The bank term funding facility.
It could be this. It could be New York Community Bank, right? Because it's a $100 billion bank.
And that facility closes in a couple of weeks here on like the 12th, I think it is, or the 11th, the Fed term funding program ends. So they can't borrow from them. They'd have to go to the discount window or borrow at a different bank. But who's going to lend to them?
There's nobody to lend. So once they go under, that's great news, because that'll force the Fed's hand to lower rates. So the banks also have what we call a negative interest margin. So right now, bank has on their books 2.5%, 3% loans, but that you go into the bank and they're giving you 4.5% on your money.
Right.
Okay. Well, how does that work? So you're actually losing every day you're in existence. Wow. Banks are not supposed to have negative interest margins. In fact, I can guarantee you a bank will go bankrupt if it has a negative interest rate margin long enough.
Wow.
So think about this. You have negative interest rate margins, $1 trillion of bad real estate, okay, and $1 trillion of loans that should be worth 40% less just because of rates.
Wow. So how does this affect a normal person? Do you just stay away from the financials, or could this be broader term systemic, or just broader term good?
It could end up being broader term systemic if the Fed doesn't get moving, I think for the average person, where it hurts is when you're trying to get a loan.
Yeah.
Okay. Because what's happening is banks make credit harder and rates are already super high. Equity lines are 10%, right? Mortgages are 6.5%. And then you're going in to get the loan and they're running you through the ringer because it's like the credit has to be good. So it's very hard for homeowners to buy homes. And we're seeing that in the numbers.
Just this morning, there was this piece put out here. Auto loan access declines. The ability of consumers to get car financing is at the lowest level since during the pandemic.
Yeah.
It's crazy. So you're actually seeing credit tightening.
Right.
But eventually that's going to kill the economy.
That's what it does. Right. And so fortunately, we haven't had too much of a negative impact on the economy unless you're trying to buy a home or a car, right? So you're looking at car sales like at Tesla down. If you're a real estate broker, you haven't sold a house all year, it's
home sales are here. I have that. It's funny. I have that chart right here. We'll have to throw these up on screen, Christian, but this right here, total existing home sales, the blue line on the right side shows you where we are.
Oh, yeah.
And we trace that back to 2010 and 11. That's
financial
how
crisis.
bad this is. Yeah. The bottom basically after the financial crisis. That's how bad it is with volume of sales right now.
But you know what the craziest part about it is in post-financial crisis, there were no banks. It was a nightmare, and it took like a year or two for credit to really come back. Right now, there's plenty of banks and whatever, and yet we're seeing the same result.
Wow.
Okay.
Weird.
But they were talking about like why there's such a negative opinion in the economy, even though everybody has good jobs.
Yeah.
And it was like, well, until you try to buy a house. But when you're paying 6.5 on a mortgage and a house at an all-time high price, and you've had no price decline because of higher rates, actually you're pretty unhappy because you can't afford the house, and then househack comes in and buys the house for cash.
But then people get mad.
And then they got to rent it from you.
What do you say to people who say, because we like to look at what we do at Househack is buying, which we're fundraising, by the way. Go to househack.com/2024. But we like to buy, a house that's in like foreclosure. Somebody can't functionally live in. So we help the seller, and then we remodel it and create a house that somebody can functionally live in. But there seems to be this people or landlords buying homes thing. Well, but don't people remember we have to rent homes somewhere? How do you balance
this is
that?
a tough one because, and I always say to real estate investors, you can't look at real estate investing like the stock market because people live there.
Yeah.
Okay. So when people live in the home, there's humans involved and families and children. And it's not like you can just, a lot of landlords don't care. They just kick people out on the street, but they're still people, But the idea, we should ban companies from buying single family homes. That's not fair. No, it's really simple. We need to build way more homes.
Just build more homes.
Right.
Hey, if only
there's a lot of land in Texas.
Did you know somebody ran for governor in California and suggested just build more damn homes?
And I voted for that person and he lost. And I don't know why. Okay. No, but why aren't we building more homes?
Well, but California politics, duh. That's why.
It's worse than politics, right?
But do you know where the best place to buy a home is? California. Because they won't build more homes.
That's why our prices don't go down.
It's the greatest hedge. We were looking at this happened. We were in it was Austin, Texas. This was in October, I want to say it was. We were in escrow on a property. Great deal. All the sold comps were like 550, 6, and we're in this sucker for like 4. We're like, okay, 50K in. Nobody can live in it. The plumbing shot, whatever. It's going to take money and somebody with experience to fix it up. But we'd be in at 5 maybe, and it's we're up 50 to 100K on it. Okay, great. Easy for us to do. And we get there during our inspection period. I'm going, so how's the business going? The agent looks at me and goes, it's shit.
Yeah.
And I'm like, haha, good joke. So how's it really go? No, it's horrible.
Yeah.
And so then we started looking at not just the sold comps, but the active comps. You have to always do this. So as we're there, we're looking at the active comps. Everybody's slashing their prices. Yeah. Because what's happening is there's so much building that's possible in an area like Texas because it's so easy to build relative to like California. You get a permit there in 3 to 6 months. Here it's 2 to 3 years.
That's right.
So there's so much new construction, so much of a flood of new construction that why would people buy even a remodeled 1970s home when you could just go get new construction at a cheaper price?
Right.
So prices have just been plummeting in certain pockets.
In certain markets.
Yeah, and it's Sunbelt.
So
where everybody went COVID.
Though. It's where you're stabilizing the market is what you're saying. Yeah. And I would even make a further argument. I've had some horrible landlords. I've rented a lot of houses in my life.
Yeah.
Because I like renting, actually. My ownership experience has been very painful so far because I've been in construction since the day I bought my house. No, this is your fault. Okay. I'm doing a big house hack, but I'm very happy with my house. It's almost done. But it's been a year and a half of construction.
Your wedge deal?
No, but I had bad landlords and I had good landlords. Yeah. And one of the things when you started House Hack and I'm involved, I said, we have the opportunity to be a great landlord.
Yep.
And there's so much to that. Right. And so that's my argument against the haters who are saying, you're just taking houses away from people. I don't agree. I think those people wouldn't have gotten this house. I agree with you 100%. The houses we're buying are crappy and we're fixing them up and we're making them nice, but we're going to be good landlords.
That's so important.
And that's so important. And that's really what I would say is like, you can't judge everybody by the same brush or whatever. They paint everybody with the same brush.
Right.
I think what you're trying to do is capitalistic but you've opened that investment opportunity up to everybody. It's not some exclusive investment, but it's also about improving properties and renting them and being a great landlord and giving people the opportunity to even buy these properties down the line. And I think that's a different business model than a lot of these companies. And that's what I would say.
Yeah, that's a good point. I mean, if let's say you give people an opportunity to own a share as a tenant of the property that somebody else is managing, you actually make real estate more accessible.
Like they could actually buy househack stock and they're paying their landlord and they have an investment, right?
Easy.
Which you really can't do with most landlords if you think about it. There's a few publicly traded landlords, but
auto pay,
massive.
Get a free slice of the stock of the home you live in.
Yeah, and I think it's also about dealing with people who want to do what's best for tenants and build nice
it creates a win-win relationship then too with your tenants. If they
you guys have done such a nice job with the houses that you fixed up already. And I can tell you as a person who rented houses, the difference between a good landlord and a bad landlord, and I'm sure everybody listening to this will agree, is like day and night in your life and experience. And I had a bad one, this last one I had before I bought my house, and it sucked.
Sorry
it sucked. That's how I ended up buying my house. He wouldn't fix anything. And we were just after him every day. And finally I was like, sell us the damn house. Like if you're not going to do it, and then finally, because rates went up and he kind of got nervous, he sold us the house. And I'm like, thank God. And I thought there would be way more inventory now.
Still not.
There's less.
There's less. It's
hey, not to jump you off track, but I really wanted to talk about this today.
Do it, please.
Is taxes.
Oh, yeah.
Okay.
Please.
I wanted to bring up taxes because it's time to start doing your taxes. And you got a ton of viewers. And one of the things that I wanted to bring up are ways that people could save money, like right now, through making smart tax moves.
Let's hear it.
And a lot of these are in real estate, for example. So like, real estate is a really great tax investment in general, and you get these tax advantages, but it only counts if you own your home, right? But what happens if you rent your home?
Okay.
Well, you know that most people work from home now, right? So there's like part of your rent is actually like going to an office, it's an office expense, but you can't really write that off. So it's like, how do you create a situation where you can write off these expenses? So most people don't understand the value of an LLC. So you're the master of LLCs, aren't you?
There are a few LLCs around.
Yeah, I bet. Well, this is something that somebody should spend some time thinking about, especially if you're renting and you're working from home, is starting an LLC, because then you can start taking deductions for your expenses from working from home. Now, most people don't even understand this at all. Well, you actually have a cost that's yours for work. But if you work as an employee, you can't deduct those costs.
Interesting.
But if you have an LLC and you have income going through it, you can. Okay. Now this is complicated. What should I do? You should talk to a tax person. Well, the best news is Gerber has a GK tax and accounting division now. And if you contact us, if you go to gerberkawasaki.com, we'll help you figure out ways to save money on taxes. Now, the second greatest thing ever is the 401k or the IRA plan. I wanted to talk about that because most people don't take advantage of their IRA. And one of the best trades I ever did for a client, one of the best investments ever, was I bought them their shares of Tesla in their Roth IRA.
Nice.
Okay. This was lucky too, because he had multiple accounts with me and I was buying stocks for them in different accounts. And I just happened to put the Tesla in the IRA. Okay. And they had something like $10,000 that they put in Tesla 10 years ago.
Wow.
Okay. What do you think that's worth today?
$300K?
Yeah, something like that, right? So
that's amazing.
So now, okay, in real life, if you just did it in a regular account, what's your tax consequence on the $300K?
Well, long term, if you're in California, 30% at least, right, 100K is gone.
Right, right. So 100K is gone. But what happens if it's in your Roth IRA? Zero taxes. Now, most people have no idea how awesome the Roth IRA is.
Yeah.
The Roth IRA has zero taxes, okay, ever. And the best part about it is when you die, your kids inherit it tax-free, and it's tax-free for them forever. You literally take money, it can never be taxed again.
That's all.
It's really a wonderful plan. It's just like, if you're a young investor and you don't have a Roth IRA, you need to call us right away. See if you qualify. Now, you can do this in your 401k, or they have Roth 401ks as well. But the 401k is another incredible vehicle for saving for the long term and building up money tax deferred. Okay. Why aren't people doing this? Because we talk about investment stuff all the time, but we're not talking about that you can actually increase your returns dramatically by not paying taxes. How much? Well, it's typically for an average person, 2 to 3% of their returns are lost because of taxes. So just by using tax
to make that
advantage,
clear, that's 2 or 3% of the yield. So like if you had a 7% return, you're saying 2 or 3% is lost.
well, yield's a little different, but yes.
Okay.
But let's say you just have a traditional mutual fund or ETF and you make 10% a year and you realize some of these profits.
So you have $100K and you make $10,000.
Right.
A lot of people you're saying are spending
You're going to
$3,000 in taxes.
Taxes because
Okay.
And so
What's a good chunk?
Well, think about it. If you can increase your returns by 1 or 2% over the next 20 or 30 years, the amount of money you have in that account doubles.
I like what you, that's crazy. I like what you said earlier. You said something about it's most people, it's not that they make bad investments. It's that they make bad choices around their investments or something like that.
We were talking about behavioral finance.
Yeah.
Well, we were talking about the fact that the market has gone straight up for the last 50 years.
Right.
So, if you invested in the S&P or the NASDAQ was actually created when I was born. And if you just did that for the long term, you're rich as hell. Okay. So why isn't everybody rich as hell in America? Right. Well, it's behavioral, right? So, if you buy the S&P, you can't really lose over time if you hold it for 10 years. So why isn't everybody doing that? And the problem is behavioral, right? Because it's like when markets are high, what do people want to do?
Oh, buy more.
Buy more. And when markets are low, what do they want to do? They want to sell. And this is just behavioral, like finance 101. And there's no way for people to avoid those emotions.
Of course.
And so that's why financial advisors play such an important role. A lot of people think, it's about picking stocks and stuff. No, a lot of times it's just saying no.
Just fighting yourself.
Yeah. And so they call us up. Oh, the markets are down. I don't know. It's like in 22, Nvidia was down 50%.
Yep. Yeah, it was down at like $120 or something there.
Nvidia was down 50% in 2022. Oh, why do I own this dog?
Yeah.
Right?
That's crazy. It went from I remember now, it went from people were buying in like 320 and then it went all the way down to like 120. And it was like, this is the worst stock ever. What an idiot. Yeah. What a loser to buy Nvidia. Now it's $800.
That's right. And so it's like buying low and selling high is extremely difficult because you're actually fighting all your emotions. Like now. So now we've got all this Nvidia. And do I sell some? It's really hard, to sell some. Yeah. So you just gotta sell a little.
Just a little.
Just
trim.
Just a little trim. And it's funny because then people give you a hard time because it goes higher and you're like, I still own so much Nvidia.
The social aspect of it almost amplifies the emotion.
100%.
So the more public you are about what you're doing with your portfolio, the more amplified what you're doing is, because if you make the wrong move, everybody makes fun of you.
Well, this whole idea of posting all this stuff definitely doesn't help your returns.
No.
One of the things that most people don't want to accept, that good investing is actually quite boring.
Oh, yeah.
Like if you just buy a good stock like Apple and you just hold it, there's nothing to do.
Where's the daily trade?
Right. And I think most people are looking for like the dopamine, you go on to Coinbase and all the numbers are moving and it's like very slot machine-y, and Robinhood's like a big slot machine. And that's actually the worst way to invest. The best way to invest is like in your 401k where you put money in monthly. And it's a system called dollar cost averaging. Most people don't even know what this is.
Wow.
And it's super powerful. It's one of the simplest like investment philosophies ever. And it's been around forever. And it's just investing money on a systematic basis monthly.
Simple.
And that's what you do in your 401k. It turns out that's the best way to invest money, where you take any emotion out of buying. So let's say you like a stock like Nvidia and you want to buy it, but it's $800. So what do? Well, you just buy a little at a time for the next year because it's going to move all around. And if you think you're going to time it right, you're wrong.
So what do you think about the AI? Is the AI movement? The AI is it all going to come crashing down?
No.
Oh.
No, it's the opposite.
It's not a bubble.
Right now, in the last week or two, I have physically used 3 of the most incredible technology inventions I have ever seen in my life. The first being AI. There's very little I do that I don't run through chat now.
Ooh.
Very little.
Okay.
It is great for a lot of things. Okay. You should try it.
Ooh.
But when you start extrapolating out all the different services we use, from Airbnb to Uber to Apple to Netflix, and what knowledge can do to all the data that they've collected on us, this is very powerful. Very, very a huge opportunity to increase productivity, especially among, educated workers. Things like Microsoft Copilot already being integrated into our business. We've already integrated Zoom notes into all of our Zoom meetings.
So how are you doing that? Like, give me some real examples. So like you're in a Zoom meeting and it just transcribes it for you, 100%. Or summarizes it for you?
It does. It's not a transcription. It's a summary.
Oh, it's like minutes.
It's minutes. So we used to have a person's job, so we're doing a meeting with you and one person's taking notes, my assistant or whatever. But it's also like, action steps, what we didn't need to do with each client, things like that, taking in information, and then we're doing the appointment with them, and so on and so forth. Now, since the pandemic, most of our appointments are done on Zoom. And so what happened when Zoom AI came out, we signed up for it immediately. And what it does is it summarizes your meetings. Now, each meeting with a client, actually, legally speaking, we need to document and so on and so forth. So it sends me these notes now, and they're just so well done. It's really well done. So it breaks down each topic and paragraph and then summarizes everything that you've talked about with those clients. And now we're cutting and pasting that into our Salesforce.
Wow.
Okay. Now, I've been saying this all week. Salesforce should buy Zoom for sure.
Okay.
Okay. For sure. So it has a video platform. I set my appointments through Salesforce, and then my video just pops up just like what Teams is doing with Microsoft. So we'll take that, we'll cut and paste into our Salesforce so that we have our notes. So now Zoom AI is taking notes. Now, where that also helps us is in management, because now I can oversee all the appointments all of my teams are doing. We can see exactly what they're doing in their appointments and then help those advisors get better at what they do.
For training purposes.
100%.
So like
also compliance.
When they say this call will be monitored for training purposes or whatever, like you guys can actually check now. It's not just something that people say. Because I always wonder, is anybody actually going to listen to this phone call? But you have AI that can help you.
Well, that, and also in the phone call thing, they're just taping that. So if you get in trouble, they can go back. They don't actually check it in real time, but it's mostly documentation. For us, part of it is compliance, but we don't have issues with that. It's mostly the idea that if you have younger advisors or they're working with certain cases, you can see what they're talking about in the order of their conversations and where things could have been improved.
They can improve sales or whatever.
Totally. So we're using that extensively. Now, the other place we're using it is in research. So now when I want to look up a stock or an industry or whatever, I start with chat. So I'll say, tell me everything about this industry. Like, for example, heat pumps, air and heat pumps. We invested in a company called Train Technologies. It's done phenomenal for us. I put some heat pumps in my house. They're amazing. I don't use natural gas anymore. My natural gas bill went to zero. It's really a cool, great for the environment and such. But I knew nothing about heat pumps. It's like nothing. So it's like I go into chat, tell me everything about heat pumps. How do they work? Explain to me this process. And it's just like, we're just
here you go.
And then you can ask it questions, and now it's also for my writing. I like writing. And one of the things I hate about writing is having people proofread it because everybody who proofreads does it a little bit differently. And then they mark up what you're writing. And some people are really good at it, but most people are not. So you're having your assistant proofread something. Then I re-proofread it again because I don't like all the changes. And then I'll submit something, and I'm always never 100% happy with it because it just takes so long to really write something good. Okay. So now 10 minutes. Okay.
Wow.
I write same thing I'm going to write, whatever, cut and paste in the chat, make this better. It rewrites it for me, just like the proofreader. It's still my article. It's literally the same exact thing. But when I read it, I go, this is perfect. This is perfect. I've never written so good in my life. And they're like, is it you? Yes, I'm still writing it. I'm putting all the content in, but it's rewriting it just subtly, but with much better grammar.
Wow.
And it's just, it's just really good.
So at what point do we start seeing real profits from this? Is it the OpenAI's charging you the $20 a month?
Yeah, $20 a month.
Yeah. It's just everybody in mass paying that basically.
Yeah. Yeah. So the idea is, we spend a lot of money on Salesforce every year. It's a very expensive program, but it's very, very efficient for my firm. And we've worked very hard with it, and it has no AI in it right now.
Wow.
It doesn't suggest anything. So it gives you lists. It gives you data like you need to do this and checklists and stuff, but it doesn't do any mining. You can't teach it anything. So Salesforce is a company that could just dramatically improve through using AI. So would we pay an extra $20 a user for that? 100%.
Oh, wow.
100%.
Okay. So if I could get the AI add-on, I'll pay more per seat.
You're already paying so much per seat.
Yeah.
It's like, why would I not do this? It's just like Microsoft paying $20 more for the Copilot when you're already paying Microsoft 365.
Yeah.
It's like, why wouldn't I do that? You know, so that's sort of what's going to happen. You're going to see these $10 and $20 a month, or they're just going to reprice the packages that you see in tech packages to sign up for stuff, you know, like Adobe or whatever.
Entrance costs go up.
Yeah, it'll be like Adobe Basic AI, you know, and so essentially everybody will just charge more for the same programs. But you'll say, well, why would I pay more? But if they're 3 times more efficient, for sure you're going to pay.
Now, you mentioned that there's one worker group that would be most at risk of being replaced by AI. It was while we were driving back from lunch by the farms.
Yeah.
What can you explain that a little bit? And is this a warning to people? Which worker group is most likely to get replaced by AI?
Yeah, you know, you love these topics, don't you?
It's fascinating.
Well, we were talking about the demand for labor.
Yeah.
And so like if you're talking about redoing your roof or gardening or building something or any labor, the you know, house cleaners at the hotels, whatever, the demand is off the charts and the pay is going up. Okay. But there's a lot of people, especially college educated people, who don't want to do those jobs.
Right.
Okay. They went to college. They don't want to work, you know, mowing lawns or whatever. So those people go to work most of the time at bigger companies now. So you have all these big companies people work at, and in a lot of cases, they're in the cities and they're got these work from home things going now, and they make pretty good incomes. And a lot of their jobs are sort of like not easily defined, I guess. You know, you're in marketing and you kind of do this and you kind of do that. And I think what we're going to see as companies drive to increase profits is where can we create efficiencies? And where AI creates a lot of efficiency is where there's inefficiency. And one of the most inefficient things I think that exists today is work from home and the sort of like...
Oh, so you don't like the work from home?
No, not really. I think flexibility is great and I'm all for that actually, but I don't think you're going to be a better employee, make more money, collaborate better. Like where's the upside other than to you? Okay. So like if you're trying to build your career and you're working from home, you're not going to build much of a career because you need to be around the people who are actually building the company.
Oh, you're going to get passed up for promotion.
How do you learn anything at home?
Wow.
Like at my company, it's a constant learning process. You start off, you're 25, you're 30 years old, you want to move up, you got to learn stuff. So if you're home, what are you learning? But you come into our office, you got 50 people working, you got accountants, you got insurance people, we got advisors, we got all these people working. So you got a question about this, you got to do that. Oh, I want to talk about these stocks, or, you know, there's always something going on. It's fun, actually, you know, and I'm all for flexibility and work from home as an option. But what we've got are companies now where people just work from home, and it's an entitlement. And as the economy gets tougher, as the rates bite, as companies get leaner, and now companies have to show more profits, we're now seeing the layoffs at every single tech company.
Interesting.
Every single 5-10%.
And you think the AI is going to contribute to that?
Oh, absolutely.
So you're thinking...
I think 10% of the current like tech, entertainment workforce will be laid off because of AI.
And then it might be harder.
Why do you think they're having these strikes in the unions? Because they know.
And so you think that could be accelerated by AI, 100%. But then also it's harder for you to actually get a job because maybe you don't have experience in actually the manual work or whatever it might take to get on the ground floor.
You're not going to start like fixing cars, even though it's very lucrative, because you just don't have that skill set or desire, you know? So you were working in marketing at Amazon. You know, actually, we just had a client, unfortunately, get laid off from Amazon. Very, very high paid job in the entertainment industry.
Really?
Yeah. And you're sort of like, well, where does she go from here? You know?
Amazon's laying off.
Yeah. Well, it's MGM. Yeah.
Okay.
The entertainment business is laying off. That's what happens when you have strikes. So I said this every time. Strikes are the worst thing for industries because what happens is the people get what they want eventually somewhere or another, and then the companies need to make money, so they fire people. So you gain here and you lose there.
Sure.
You know, and then you're on strike for 5 months. You didn't get paid. The industry now has nothing coming out. You know, it's just so people are losing their jobs thanks to the strike. Yeah.
Wow.
Yeah. And so what happens is if those people don't really have great tech skills or really employable skills, there's not going to be new jobs created.
What do you do?
Right.
So you have to, so then you either have to rely on social services or what you've earned so far, or a combination of those, Or you have to change your skill set, which is hard.
Change your skill set or work for less money.
Wow.
So I think that there's this reckoning coming from. So I was telling the story when I graduated from college, how desperate people were to get a job.
Yeah.
Okay. This younger generation has never experienced this, but this was how it always was.
Hard to get a job.
Yeah. So when I graduated from college, people would apply to like 8 financial firms like Goldman and JP and this and that, and they would all get rejected, you know? And that was like the thing at Penn was you'd like put all your rejection letters on your door. I never did that because I never applied to those firms. I actually worked at Disney briefly. And so, you know, I got hired out of college to work for Mike Eisner at Disney. And I lasted there for about 3 months because like they didn't actually have the job. So they had me like doing nothing. And I was like, what the hell is this? It's just some big company. I'm like stuck doing nothing until the supposed job I'm supposed to have actually happens. And so I ended up leaving Disney and went to a couple other record companies. That's a whole nother story. But I think the idea was it was really hard to get a job. You would do like 10 interviews, you would dress up, you would do anything to get a job. Okay. And I remember hiring when I was an advisor, a young advisor, and we were hiring for our company, and we would have like literally like hundreds of people apply every week.
Oh, wow.
Yeah. Yeah. And this was 1995. Today, you can put an ad out in the paper. I'm hiring, I'm paying 85 grand and get nobody even applying. You see what I'm saying?
Wow.
And so the demand for labor has been so strong that everybody's gotten complacent and everybody's gotten comfortable, and they think that they deserve this and they should get this benefit and that's completely thrown the entire work employee relationship upside down. And work from home is the most extreme example of that. Okay. Wow. Nobody's working from home at Blackstone. They're 5 days a week in the office. Okay. We were just out there talking to them, and you know what? They go, we make a lot of money here. Okay. You want to make money? You come into the office.
Wow.
You don't want to come to the office? You don't work at Blackstone. Okay. So the people working at Blackstone want to make money. And I think that's what the younger generation is going to have to come to terms with in the next 5 years.
Wow.
Is that the labor thing is going to come back in balance and jobs won't be as plentiful. Just making 180 grand kind of doing whatever isn't going to be there anymore as companies need to show growing profits. So you better get some skills.
Wow.
Now, on the other hand, if you have skills, they're going to get paid. You're going to get paid more than ever because that's what we were talking about.
Even more opportunity.
That's right. So the haves and the have-nots are going to get way bigger. So what do you think I told my kids this week? I go, we're sitting down on the AI and you're learning AI. You're going to learn this stuff. And they go, well, the teachers aren't going to let us use it. And I laughed. And they go, why are you laughing? And I go, because I'm going to teach you how to use it and they'll never even know you're using it. I go, you think the teachers are going to be on the forefront of AI? I go, listen. You're going to write the paper and I'm going to show you how to use AI because this is what's going to shape your world. Whether you like it or teachers like it, this is the world of the future. And I'm preparing my kids for the future. So the best thing you can do is start teaching your kids chat and teaching your kids how to use these tools because they'll be behind if they don't know these things. But if they do, the opportunities could be limitless.
That's incredible. What about all the work from home over at Twitter? Is that going to lead them to bankruptcy?
I don't know what they're going to do at Twitter. I don't know. Money's got to go into this business from somewhere. I think they need money. So it's where Elon's going to get the money.
Tesla stock.
Unfortunately.
Yeah.
Unfortunately.
You think that's coming?
It's liquid.
Yeah, he said that.
He sold some SpaceX recently. But
did he?
That was that last offering.
Oh, interesting.
He owns a lot of SpaceX.
Oh, yeah.
But it's not as liquid. He's got to do the whole offering thing. But he promised me that he wouldn't sell Tesla for a year. Remember, that was like last December.
That was 2023, all of 2023.
And he said then, 1 to 2 years, I think he said.
Maybe not 2024, but he sort of left that open.
Well, I think there's the biggest risk for Tesla stock.
Is him selling.
Yeah, for sure.
Yeah.
I think that's a risk and it's reality. And that's the upside of the pay package was him losing the pay package prevented him from selling a lot of Tesla stock.
Oh, interesting. For taxes.
I mean, I was surprised the stock didn't go up.
Yeah, well, because anti-dilutive.
Right. Actually, shareholders made $50 billion that day.
Yeah, I mean,
it was actually a
10%,
gift.
basically.
People are like, Elon deserves it. Nobody's debating that, but Tesla shareholders got back $55 billion, whether they realized it or not.
Right.
But the stock went down.
That's incredible.
Yeah.
That's incredible.
So I think the reason is Tesla has a very dysfunctional board, as I learned when I thought about running for the board, which I learned very quickly how dysfunctional that was and decided not to do that.
So was it just so much pressure, or what happened?
Well, I started doing research into the board, and like what really caught me was the comp thing, which now they all have to give back. You know, they got sued for the comp thing. There's never been a board pay $200 million each to be on a board.
Oh, wow.
So that alone is a conflict of interest, because if you pay somebody so much money to be on a board, then they're biased. The whole purpose of being on a board is you're independent. You get paid at Disney or wherever, $300-400 grand. Now these are rich people, so it's not a ton of money, but it takes a lot of time being on a board at Disney, you know? So you get $300 grand, you get 30,000 in options. That's being on a board. That's always been being on a board. So how do you go on a board of Tesla and you make 200 mil?
Wow.
You know?
Wow.
So I started looking into that stuff and I go, oh God, this is going to be a nightmare. And then sure enough, that lawsuit was going on. And then they lost. So the board of Tesla has to give back $750 million. Okay. Actually, Tesla shareholders have done pretty good thanks to the courts, actually.
Huh.
See, that's kind of the odd thing about this whole thing is the courts have actually helped Tesla shareholders a lot. Whether anybody likes it or not is not the issue, but, trying to like taking Elon out as chairman of the board, having somebody supposed to be Twitter sitting him. These were all steps for shareholders.
But I don't think he does that.
No, he doesn't.
Nobody's Twitter sitting him.
Nobody's definitely
He doesn't
Twitter
even want to show up at the SEC hearings, which now he's being forced to go to.
Yeah, well, according to our laws here in the United States is when you're subpoenaed, you kind of have to go.
Yeah.
Yeah.
Why did those not apply to Elon?
They do, actually.
Yeah,
and so
he doesn't think so.
Well, he's an immigrant, it turns out, maybe even an illegal immigrant, it turns out. And maybe he never learned that in our judicial system, you have to actually go.
Oh, wow.
I'm sure he knows that. He has a very good lawyer.
Are you going to buy a Cybertruck?
I just did.
Ooh, tell me about it.
I'll tell you, it was kind of a conflicted decision. I actually posted it on Twitter. Should I buy it or not? And 65% said yes.
I'm surprised only 65% said yes.
Well, I said I have the Plaid. Should I replace it with the Cybertruck?
Oh, okay.
And so there's a certain amount of people who were like, no, because I don't think the truck serves a lot of purposes other than fun, which is why I bought it.
Okay.
Because I was like, truthfully, I don't need this. And I'm kind of bored of my Plaid. I've had it for a few years. So I was like, but I don't even know if I can trade in my Plaid and get back money. So I'm like, that sucks. Thanks, Elon. And so
keep both.
Yeah, that's what people say, and they go, why don't you keep both? And I go, well, it's kind of not in my nature to just waste money. It's just not who I am, even though I can afford it. People, you can afford it.
But you got to have the Cybertruck nonetheless, 100K.
No, it's not that I got to have it.
Twitter said so.
No, Twitter helped push me over there. I think what it was there's technology in the Cybertruck that's incredibly cool and it's new. And I've always had the newest vehicle of Tesla to test these technologies.
Yeah.
And I don't think that I'll know as much about Tesla if I'm not driving a Cybertruck.
Oh, okay.
Because the Cybertruck needs a lot of work still, like software. We were talking about full self-driving doesn't work and things like that. So I think we're going to see a lot of the innovations from Cybertruck then move on to the other vehicles. So I actually feel it's kind of my duty to do this because I'm an investor in Tesla. I still have, 60 plus million in Tesla for our clients and I still love the company and I want to see it be successful. And so I just feel my edge as an investor is knowing more than other people. And if I'm not driving the vehicle, I won't know more than other people.
Are you an Apple investor?
Yeah, 100%.
Did you get the
Yeah, I have it.
How was it?
How was it? How is it?
Oh, okay. All right.
I mean...
So you weren't one of the...
So I was saying, I saw 3 of the greatest inventions ever. So Cybertruck is 1, AI is 2, and Apple Vision Pro is 3.
Really?
Yeah, 100%. So I'm having this really weird experience with the Vision Pro because it's everything I ever wanted out of a VR headset, but more. And Oculus was constantly disappointing. I would spend so much time getting it to work and the hardware and the software and the games and this, and it was just so clunky and heavy and junky and I hated it. And every Oculus went in the trash.
Oh, wow.
Yeah, it's just, I heard the new Oculus is great, but I gave up on Oculus.
Okay.
But I always felt there was not a good ecosystem. So I get Apple Vision Pro. I put this thing on. And irrelevant of the hardware side, it immediately opens right into your Apple ecosystem. So that alone just makes the whole process way better, way easier.
Familiar.
My photos are there. All the apps are the same. And it's kind of like, here are the apps that we've made for this now. Download these, which aren't many actually. And that alone, the setup being so easy, which is one of Apple's, specialties, made it nice. So then there's the hardware. So I put on this thing. And I got it fit at Apple, so it fits right. It has to be custom fit. It has to be custom fit.
What do you mean it has to be custom fit?
Well, because it's a headset, so your face is just a different shape than mine.
Sure.
So what Apple did was they want it to stick right, so there's not light.
Okay.
But if it's not one size fits all. So there's different sizes. So
they just have like 2 different sizes.
It's not 2. They have many different sizes.
Oh, they have many?
Yeah, and you can just snap it in to the
they give you a different one.
Yeah.
Because see, I just ordered it online and I'm constantly like trying to adjust the damn thing.
Right. So you got to go into the store and then they'll fit you for it. And they'll say you're a 21W or a 22W.
Oh, wow.
And then you get it. And then they also have custom inserts for prescriptions, which
I got those.
Yeah, but mine are still messed up. I got to get this to work still. But my eyes aren't so bad, so it's fine.
Oh, thanks.
Sorry. So I put on the hardware and I find it to be completely immersive and amazing, right? Yeah. Like right off the bat. So the one criticism I have of it is it's so wonderful and enjoyable, but it's a little bit heavy. And just enough so that it's like, it's pushing on your face like this. And then what happens is when you take it off, you look like a crumpled person. Like my wife was like, what the hell happened to you? That like you just smash your face into a wall like 12 times. I looked really weird. Like my eyes were puffy and this and that because I was trying to watch a movie and you can't. So basically you can wear it for 30 to 45 minutes comfortably and then it's heavy. Okay. When this thing gets lighter, game over.
Really?
Game over. So the experience I've been having with it, which has been most interesting to me, was when I started playing my own videos and pictures from my childhood.
Oh.
I mean, my kids' childhood.
Yeah.
They didn't have that then. You know how Apple does these memories and they put the music to it. And I was saying this in an interview this morning. Last night, it was like Coachella through the years. Oh. And it was with my wife because we used to go every year until recently and it got bad. And so like it starts showing me these videos and pictures with the music, but it's like massive, like better than an IMAX theater. And you start to get emotional. It's really weird. You're almost reliving the moments like, and I almost cried because like they were such good memories. Like when my wife and I were going to Coachella 2014, 15, 16, 17, 18, 19, 20, until COVID. It was so great. And then I was like, I got to shoot these spatial videos with my children before they get older because you'll be able to relive these experiences in a way that I've never had. So it's really cool. It's really cool because I think now that I'm older, these memories are so important to me and you have them in your head and that's great. But the way this is so immersive, it's almost like you're opening up your memory up into a whole new level.
Wow.
So that's just photos. I haven't even got talking to gaming. I was watching Avatar: Way of the Water. It's insane. Wow. It's insane on this thing. And I'm not even talking sports yet. And not to mention the illicit things you can do on this. So
like Microsoft Word.
Yeah. Yeah. So Apple Vision Pro.
Okay. So would you buy more Apple stock after that?
If it wasn't so expensive, yes.
Oh, you think Apple is expensive or the headset's expensive?
No, both. Both. I don't think this version is the version that they sell 10 million a year.
It's not mass market.
Although they're selling a lot of them. It's very expensive. What I think is version 2, I'm really thinking 2 years from now. So 2 years from now, tech gets twice as good. It's a little bit lighter. It's a less of a form factor. This is a game changer product they sell 10, 20, 50 million of. So I think for long-term investors, this is the best thing that could happen for Apple. Apple trades at a pretty high multiple for Apple right now in the mid-20s. Apple traditionally used to trade around 20 times earnings. So Apple's trading a little bit of a premium. They don't have a lot of stuff right here that looks so exciting. But I think as a long-term Apple shareholder, you should be very excited because not only is a new hardware ecosystem, it's a new software ecosystem.
Wow. What am I missing, Ross? I mean, is Jerome Powell going to come save us or
save us from what?
Yeah, that's
from
true.
Himself.
From the landing.
Yeah. I've been very critical of Powell because he's so reactive and he's continuing to be reactive.
Would you take him to dinner? Do you like him?
I would love to take him to dinner.
Like a date.
Yeah, like I'm always fascinated by people like them and trying to understand their viewpoints and his perspective. But I've hung out with plenty of academics like him, and I get their viewpoint, and they just don't have enough real world understanding. So they look at data points, and data is always in hindsight. And
like the CPI.
Yeah, any data you look at is old, right? Yeah. Because it's data. So if I wrote it down, it's something that already happened. So my job is not to analyze what already happened. What my job is to try to analyze what's going to happen. Yeah. And the Fed doesn't do that. Huh. Okay. The Fed's saying, here's my data points and this is what should happen. The problem is they're 3 months behind. They've been 3 months behind for 2 years. So now they need to be lowering rates and they're still, jammering about, blah, 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 and I'm like, they should be very clear what's going on here. Okay. The banking system has some cracks. Rates we've had to keep a little bit higher to make sure inflation's dead, but they're still talking like it could reemerge and this. Again, this is nonsense. The risk is the other way.
Too much deflation.
Yes. We have an aging society. I mean, there's so much long-term data points, if they need data, to show the disinflationary effects of technology, of EVs, of mortgages for 20 years at 2.5% that nobody has shelter inflation. I don't have shelter inflation. Do you?
If you get a 30-year mortgage,
right.
No. Yeah.
No. So what's this freaking number? Shelter inflation.
Lagging rent increases.
Yeah, lagging owner equivalent rent increases. Like nobody has a mortgage. Like your rent for your house goes up every month. No, it's just nonsense. So PCE comes in today at 2.8. That's what inflation is. Inflation's the PCE because it doesn't include shelter.
Gotcha. As much, yeah.
No, it's not in there. It's personal consumption, and expenditure. So there's no shelter. So that's why it's 2.8. It's like, oh, well, we throw shelter in, we get to 3.1. You see, but real inflation is between 2 and 3% right now. That's exactly where we need to be. I'd rather have closer to 3% inflation with 3% growth. That's how you get a roaring stock market. That's how you have a great economy. If you're really going to push inflation out at 2% and it involves us going to 0% growth, then we have the risk of recession and all these things the stock market doesn't like. So all Jerome has to do is just lower rates to 4.5, 4, and go away. And boy, things will be good. Real good for this country. Like really good.
Is Michelle Obama going to win?
I mean, she definitely won already.
Oh?
Yeah. Isn't she president?
Okay, so somebody else running the ship today.
The Republicans mad, huh?
Yeah. Okay.
What would Elon do with a African American woman president? That would be interesting.
What do you think deep down inside he's anti-Semitic or racist?
Actually, no. That's the worst part about it. Yeah. That is the absolute worst part of the situation.
Yeah.
I don't actually think he is. I think he's just such a bad communicator. And I think the way he sees the world comes off wrong. So it's creating issues.
He's misunderstood.
Right. The other side of it, I do think that he has a lack of emotions towards humans. And this lack of understanding of the emotion puts Tesla and him at risk of doing things that offend people, and that's part of it too. I don't think he fully gets how offensive the things he does are. I just don't think he does. And then I'm sure Tosca's telling him, his sister's great. She's real smart, great woman. They're liberal, I don't know what the dinner at the Musk house is like. Can you imagine a dinner with Kimball, the chef, and Tosca, the intellectual liberal, and then Elon? And they're like, Elon, this isn't going well, and they're like, leave me alone. I can't even imagine.
Wow.
Yeah.
My gosh. All right, Ross.
Yeah,
anything else?
Let's wrap it up.
Did I miss anything?
I wish Elon the best. I am appreciative of what his contribution has been, but I'm also a big believer that leaders need to lead by example and be an example of what's good in society. And I'd love to see Elon get back to that. And so, as I said, if he sold Twitter and just focused on Tesla, that would be the best thing ever. And I would be thrilled. And Tesla would go back up to 300 and everybody would be happy again. I just don't know if that's what he wants to do.
Yeah.
And that's what makes me sad, kind of, because I think Tesla's a beautiful thing. And I support Tesla, and I'm not selling all my stock. I like Tesla, and I think they're going to do great things in the future. And this is hopefully just a sojourn for hopefully not too long, that they'll get back on track.
Not too much longer. Yeah.
Hey, thanks for having me.
Yeah, thank you. So how do people get in touch with you?
Yeah, GerberKawasaki.com. We talked a lot, about taxes and saving money and stuff like that, as well as investing today. And, that's what we do at Gerber Kawasaki is we help you build your financial plan. We've got a great tax and accounting division that really, it's a great time to look at opportunities to save money and make money through tax plans and investing. I'm very bullish on the future. So your Roth IRA and these things we were talking about now is such a good time to do these things. So we'll set this all up for you. See, I think this whole do-it-yourself thing, it sounds great until you try to do it, and then you get scared, or then you're not sure if you filled out the application right, or you're not sure if this account's right for you, or how much money you could put into it. And that's what financial advisors do. And we're one of the only firms in the entire country that work with people of all ages and all wealth levels. And that's one of the things I really have to stress to people is that my firm, it doesn't matter how much money you have to work with us. And that's why we have so many clients and we've grown so big, because what we care about are the people we're working with, not the amount of assets they come in with. So please reach out, GerberKawasaki.com. Happy to help you. Great time to be an investor. And also, as well, househack. I'm involved with househack, and full disclosure, I'm on the board of directors of househack, and I'm a big fan of real estate and what Kevin's doing with househack. So that's also, I think, an opportunity for investors that should do their own work and go to the househack website and make sure it's appropriate for you, or work with an advisor like at our firm so that we can help build a plan that includes investing in the stock market, real estate, and other areas. So that's GerberKawasaki.com. Go check it out.
Awesome. Thanks so much for coming.
Yeah, thanks for having me. It's great to come to Ventura County here. I know.
Yeah.
It's not so bad when there's no traffic.
Yeah, that's great.
Full self-driving.
Ooh.
Ross, I wanted to ask you, you talked about AI, the Cybertruck. Is there any other industries that you've been seeing and you've been doing your boots on the ground research?
Other industries or innovations?
Industries, innovations, anything.
Well, yeah, I think it's about extrapolating technology into other industries. So one area, for example, is biotech. We're seeing this in healthcare and all the opportunities that technology is bringing to healthcare and what the potential is for that. So in like one area we're looking at is construction, for example, how companies like, you were showing me the Matterports, and we're looking at a company called Procore, which does construction software, which is now a public company.
What are you going to buy? Oh, you're going to buy Procore.
I'm looking at it.
Oh, wow.
I'm looking at it. We have clients there as well. And
they've got great reviews in the App Store.
It's a great company, and it's really the software that all these construction people use. And so they're updating this so that it's got this client interface, and so you can really like in real time track your own construction projects with your clients. So I think it's really about, there are many other industries where technology is having this massive impact in a positive way that, it's one of the reasons why I own MGM Hotels, for example. Online gambling, there's an online component to the business, but also the way that technology has made, especially during COVID, hotels and casinos way more efficient. Way more, keyless entry into your room and check in and check out and all this kind of stuff. It's all based around technology. So I think we have these core technologies that sort of are these like massive things, but then it's like, how does that affect everybody else as they implement it? Whether it's a financial company like mine or a real estate company like Kevin's, it's that, or really, biotech and healthcare. There's these wonderful, massive opportunities for the companies that integrate technologies rapidly and successfully. And that's kind of what we've done at my firm since the beginning. It's like new tech, implement, rapidly use it, increase efficiency, and that's one of the reasons we've been successful.
We've asked this question to a ton of people we've interviewed. Do you have any thoughts about Taylor Swift? I've seen some.
I have a lot of thoughts about Taylor Swift being in the music industry, and I'm not a fan of her music per se, and I don't think it's bad music. It's pop music. But I think she is a phenomenal entertainer. I think that she is an example of what, if you're going to build a music business and you're an artist, like what you should do is what Taylor's done. Now she's not young, she's been doing this a long time, but I also give her tremendous respect. She not only kicked Kanye's butt, she kicked Scooter Braun's butt. She literally redid every album and song, okay, so that people she didn't like wouldn't make a lot of money off of her, okay? Her show, not one person, after all the costs and hassle getting tickets, not one person complained. Every single person felt it was a great show. And I gotta give her credit for that. Very few artists do 3-hour shows that everybody's happy with after paying who knows how much money. People stood in line.
Thousands.
People did crazy stuff. And not one person left saying, this was a little disappointing. So you got to give her just tremendous credit, the work ethic, just the professionalism. And yet she hasn't done any of the gimmicks that so many artists do for views, like nudity, for example, or extreme language and behavior or whatever. She's just Taylor, and she's quite boring and she's quite normal, but it totally works. So I just got to give her a lot of credit. I'm a huge fan from the entertainment business perspective. I think she's done a great job. And as a musician, I think people should look at her and say, what can we learn? And there's a lot to learn.
And you have some thoughts about TikTok and Universal Music?
Yeah, well, because I'm a supporter of artists and being an artist myself, musicians have been screwed by the digital industries, starting with Spotify and Apple and moving on to TikTok and social media companies. So there's this concept which infuriates me that, a piece of digital music being a small file is somehow worth very little. Okay. And especially the idea that how many views we have per song is how compensation should be. So Taylor Swift takes 50% of the streaming revenue in the industry, and then the rest is split between 7 million people. And what it is that Spotify and Apple wouldn't be successful if they didn't have the breadth of music that they have, right? So I listen to one thing one day on another thing, and it's all available. Even though a lot of people listen to Taylor Swift over and over and over again, we sign up and pay for these services because we have optionality. So if you want to listen to Hawaiian music, you can find it, okay? I literally punched up, it had like 35 different Grateful Dead albums the other day. And I was like, this is incredible. This is so amazing. For $10 a month? Okay. Now, Netflix is charging me $22 a month. Okay. And you start thinking about how cable's charging. How is music so cheap? It's because Apple and Spotify and the companies, this is a plan not to compensate artists so they can sell devices. Okay. So a few artists make tons of money, and everybody else, it's a second job now. That's what's happened. Okay. So, and I was saying this the other day, if you're playing bars as an artist, hoping to then sell streams to make a living, you are done because they've made that obsolete. Okay. So TikTok, literally almost every TikTok post has music in it. TikTok would be nothing if it weren't for music. So they bought a company years ago that had a very advantageous streaming deal because it was a small company. And that deal has expired. So Universal says, you got to start paying us what you should be paying us. And they say no. So Universal pulls all the music. There's a lot of great artists. Now this hurts the artists on the short term because all the kids are watching TikTok for music. Okay. But you got to pay these artists. So taking 30 seconds of a song or 60 seconds of the song, in my mind, you should have to pay the whole royalty. And they're saying, oh, no, we're not listening to the whole song. You see what I'm saying? So it's crazy to me that a service that takes in, $20 billion a year in ad rev, that's based off the backs of so many artists that nobody's even heard of, that they don't want to pay people royalties. It's just insane. It's insane how musicians and a lot of artists have gotten screwed in the digital era. And it's because of digital distribution. And I don't know the solution because all artists are now social media influencers because that's what's happened. And that's what's happened. And that's why Rihanna doesn't make albums. She makes lingerie. Okay? That's why Beyonce doesn't make albums. She makes clothes or whatever. It's like They make money on all the products. That's where they make money. That's music. So that's why I'm angry at TikTok, Spotify. I think Spotify should cost twice as much and the artist should get that money. And it's ridiculous that I can listen to every artist who's ever lived. I can go listen to Harry Belafonte, and I'm sure a lot of people don't listen to Harry Belafonte, but his music's phenomenal, and it's actually the root of so much other music on here. But he doesn't really make any money. But the optionality of me being able to see Harry, but listen to his music is awesome. And I think there should be a minimum royalty to all artists on the platforms. Like, just all artists should get a minimum amount of money. And if they don't like it, then they shouldn't have 17 million artists on there that suck, So they've commoditized art and they've killed the artists. And in societies throughout history, mostly kings and the wealthy used to support artists so that there would be art. But that doesn't really happen that much anymore.
AI music now.
Oh, yeah, that's garbage.
You don't like it?
You know what I like? I like artists.
Yeah.
You go see artists because of who they are. I don't need a computer to just spit back notes that sound like Led Zeppelin. You ever see Robert Plant live?
Eagles live.
Yeah, they're
Eagles.
good too. And they're playing the Sphere, I think.
Oh.
Now you got to go see some live shows and real artists. Like I just saw Neil Young, and AI isn't going to replace Neil Young. It's like, it is what it is.
So that's the future, is music or movies without AI.
I think it's about humans do beautiful things that computers can't do. Computers can't make love.
Not yet.
Never.
Thanks, Ross.
All right.